And welcome back to Dukascopy TV. I'm Natalie MacDonald. With quarter three over, it's time to see what quarter four has in store for us. Chris Thomas is in the studio now. Chris, thank you very much for coming in.
Thank you very much, Natalie.
Okay, so firstly, how does the world look at present from an economic point of view, and what changes do you see ahead for it?
Okay, well, just now, the last week or so, there's been big problems with the US debt ceiling. Basically, this has brought the US government to a complete standstill, and the knock-on effect of that is going to be a possible delay in the release of non-farm payrolls, which is normally due on Friday. Additionally, we've had Fed tapering or lack of tapering by Mr. Bernanke over the last 3 weeks, and that's created a lot of problems in the US. Looking at Eurozone, well, that's just a complete mess politically. We've got the Italians, Mr. Berlusconi, causing problems yet again. We've got Spain and Greece, possible corruption issues still. And we've also got Germany, Miss Merkel, who has not yet been able to form a proper coalition government after she got elected last week. And looking at Japan, we've got Mr. Abe with his Abenomics. He fired his third arrow last week, and it's starting to work, especially for the Japanese exporters. The rest of the economy, we shall wait and see what happens.
Now, for the most part of the year, stock markets have rallied, but is there enough confidence to be able to push them higher as we head into quarter four?
Well, in the US, the first half of the year, the US stock markets outperformed most of the other major indices. This was very positive for them, largely due to consumer confidence being built up. House prices are now up 13% average. That's increasing the wealth of people, the homeowners, and hence they're going out and spending more money. Additionally to that, we've got the credit markets are loosening up a bit. That money is therefore getting put onto balance sheets of companies, and these companies are using that to buy back some of their stock, and hence there's a bid in the market for the US stock markets and US companies. In terms of Europe, well, that's, as I said, it's still a bit of a political mess. We've got that additionally to low inflation, and we've got low growth. So European markets are really not looking good at all. If they do perform over the next quarter or 6 months, it's going to be because they've been pulled higher by the American markets.
Now, while it's clearly not going to be happening this week, if the Fed does start its tapering in quarter four and reduces its stimulus, are there any risks to the outlook for the fixed income markets, for example?
Yes, well, the Fed surprised a lot of market participants by not actually starting their tapering in September. This caused a sharp reaction in the fixed income markets, with yields moving from 3% down to 2.6% where they currently are just now. Lots of investors scrambled to buy up bonds, especially in the long end. We saw a similar pattern in Europe, but not as extreme, given that this is mainly a US problem. Now, going forward, we've got to wait until the debt ceiling problems have been addressed, and then we've got to turn to when will Bernanke actually speak to us and give us some information as to whether it's going to be in December or perhaps Q1 of 2014. Now, when that happens, we expect yields to go a lot higher, back up to 3% in the 10-year and beyond that.
Now, moving on to the currency markets, what has been happening and where would you consider investing?
Okay, well, given the US stories at present, the US dollar index has really taken a pounding recently over the last few months. It's come down from highs of 85 to around level of 80, which in my opinion does start looking like a good investment level against most of the other major currencies. In terms of sterling as well, sterling has been fairly bullish of recently, and this is due to the new Governor Mark Carney being very positive about the UK economy, perhaps too positive, given that sterling has moved against the dollar. Cable has moved nearly 10% recently. I argue that's gone too far, and perhaps we'll see a correction there as well.
Okay then, Chris, so if we take all of this together, where would you be looking to invest then over the next 6 to 12 months?
Okay, well, there's 4 main areas I'd be looking to put my money. The US stock markets, in particular tech and consumer cyclicals. We've also got the Japanese stock market. If you can get access to Japanese exporters, fantastic. I'd be looking to sell government bonds. As I discussed, rates are going to go higher, especially in the US, more so in the US relative to Europe. I'd be looking to buy dollars against other major currencies.
Chris, thank you very much for coming in and sharing your market views with us today.
Very welcome, thanks.
That's all we've got time for right now, but we'll be back shortly with plenty more exclusive interviews for you, so don't go away. Goodbye for now.